Tesla investors, especially big whale portfolio managers and institutional analysts, are now buying Tesla stock hand over fist. Simon Hale, a senior wealth advisor for Wellington Altus Private Wealth, saw extreme volume of transactions in April, the largest he's seen since the pandemic. What was driving that? Plus, we're now seeing more and more Wall Street analysts talk about robots and robotaxi. This is something we hadn't seen before. But the big question is, when will institutions see the value of robots, and when will the great repricing of Tesla start to happen? Wellington Altus Private Wealth has $40 billion under management, and they manage investments for wealthy families in North America and abroad. Thank you so much, Simon. It's been a while. I appreciate you coming back.
Good to see you, Herbert.
It's always fun to talk to you, Simon, especially since you are a big portfolio manager. You're a big Tesla investor, and you translate for many of us retail investors what's going on in the market, what's going on with institutional analysts, and as a portfolio manager, how do you think about things? So one of the big questions I've been getting a lot, especially in the last month, as we're waiting for Tesla to roll out Robotaxi in June, stock went up, stock went down, lots of volatility. Can you explain to us what happened and why it happened?
Sure. So one thing that we try to do when we manage money for clients roughly in the $5 to $10 million range. That's our typical client. Most of our clients are retired or above 50 and have significant amounts of wealth, and they need us to build portfolios for them. So Tesla is one of the companies in those portfolios, but it is the most volatile, and it's also been the most controversial company that we've owned over the past, say, 10 years. We've been in and out of the company twice, actually. And so what we're trying to focus on when we get this kind of market volatility, we're always looking to see, is the company executing, and is there a reason why we should be worried because the stock is going down? Generally we're not worried. Most of the movement I've seen in Tesla, let's say over the last 4 or 5 years, has really been market driven, meaning it's market risk as opposed to company risk. And what I mean by that is, let's look at 2022. Elon Musk was purchasing Twitter. He sold a number of shares to help with that transaction. And we saw the stock price of Tesla move from, above 400 end of 2021 down to $100. So roughly a 75% drawdown on the stock. And a lot of people, media, and sometimes our clients as well, would point out that it has to do with what Elon is doing with purchasing Twitter, or it's because he was selling his stock. And I sort of look at that and I say, okay, sure, he was selling his stock, but the volume that he was selling wasn't enough to move the stock price down that much. Realistically, him selling was maybe 5 to 10% of the daily volume on Tesla stock. I think what's more important, and even to this day, the most recent sell-off we have, which was really difficult, what we're looking at it is this a company problem or a market problem? So similar to 2022, in 2022, look at growth stocks, right? Interest rates were going up and everybody pointed to Tesla going down, but we also owned a large position, we still do, in Amazon. Amazon was down 50 or 60% in 2022, but nobody blinked an eye, right? Nobody said that what Bezos was doing was wrong, right? And all growth stocks were getting revalued based on the discount rate. And they were searching for, I guess you call it, price discovery. And it took about a year to get there. It was extremely difficult for our portfolios because we're more growth focused, or for companies that are quality companies at a reasonable price that are growing. And Tesla was probably the worst performing company in our portfolio that year. But if you compare it to the NASDAQ overall, NASDAQ got hit as well, right? Almost every, and there were other companies that were down even more than Tesla in 2022, right? Companies that were either SPAC startups or they didn't have cash flow or revenue, and they had serious problems, and they sold off 80, sometimes 90%, and they've never recovered. The difference with Tesla at that time, and why we decided confidently to own it, and we continued to add to the position through that period, was that one, we wanted to accumulate a larger position, and that gave us the opportunity to do so. But secondly, we were looking at the quality of the product. Or is the company executing? What's the risk in this company? It's not the same company it was in 2018 when they had, they didn't have positive cash flow, they were burning cash, and they had debt. Okay, So that's a risk. But is there risk in a company when they have virtually zero debt? They're accumulating cash through that higher interest rate environment. So bring it up to what we just went through in April. And it was really difficult. I mean, the sell-off in Tesla started at the end of the year. So let's say beginning of 2025. And a lot of people would point to a number of different reasons. But if you compare it to the NASDAQ or growth stocks, they all sold off. Tesla just has a higher, what people will call beta. So it has a higher volatility than the overall market. But what compounded that and made it difficult, I think, for Tesla investors and some of our clients as well, was that you also had, the news cycle was stuck on people protesting Tesla, a car bomb, and the people that bombing Teslas, you see the people that they caught, like these are not well people, and so you can talk about their organized riots, you can talk about organized protests, you can talk about Tesla stores they're getting vandalized, but all of this was just noise. And when you looked at what Tesla was actually doing, you drive the cars, I drive the cars, we're testing the FSD, and we look at where this company is going to be in the next 5 and 10 years. This just created a bunch of noise. Now, were we able to add to the position? No, we couldn't. We already had a sizable stake. But when we looked at the fundamentals of the business, and also it was interesting to watch their last quarter earnings. They were bad. Like, I'll be honest, they weren't very good.
Mm-hmm.
But the stock didn't really move. And what that tells us is that the market is not looking at their overall auto sales. Okay. What they're looking at is, what's their cash flow? How are they managing their inventory? What's their balance sheet look like? They were still positive cash flow, which was really interesting. But from what I see today in a lot of the market movement, the reason why it has this, call it $1 trillion market cap, it's certainly not on the car business. I would almost value the car business at 200, you could call it $200 to $300 billion. And the rest of that is, maybe another 100 on energy. But Optimus and autonomy, you could put as a $600 billion call option, an expensive call option, for the matter. And so back to what I was referring to is holding on to clients' hands, going through this. We've educated our clients what this company does, and where they're going with their business. So we had a few clients that were concerned early on. And of course, if our clients don't want to hold a position, any position in their portfolio, we're not going to try and convince them otherwise. We're just here to find the best investments that are suitable for our clients' long-term needs. Mm-hmm. And so if they don't want to own a specific company for whatever reason, we will sell the position and replace it with an ETF that has similar correlation. That's all. And I would say we've had to do that, if the 200 households we work with, maybe 10 households that just weren't comfortable. And that's okay. That's okay. Yeah. And so the volatility that we just experienced in April, the market hates uncertainty. Why did the market sell off, by 1,000 points, in one day and up 1,000 points the next? It was the first time that we had a massive sell-off, that kind of volatility, and I wasn't overly concerned. I remember going for lunch with my brother at that, and the market was down 1,000 points, the Dow was down 1,000 points. CNBC was having a field day. Everybody was glued to their phones, and I wasn't concerned because it wasn't the same as the financial crisis, where we actually had banks like Bear Stearns going bankrupt, and we had pension funds with really bad. We really didn't know what was going on, but the effects we could see, we could feel, and it caused this great recession. And similar to the pandemic, we were concerned. I think everybody was concerned at the beginning of the pandemic because it was a real big uncertainty. The world's economy was going to shut down, and we don't know how that was going to play out. So you saw the bond markets froze up, the stock markets froze up. There was zero liquidity, and the governments had to pump liquidity in. But until they did, everything was frozen, and we really didn't know how it was going to play out. So I was concerned at the beginning of the pandemic. But this time around, it was man-made. It was Trump saying, hey, I need to go negotiate these new tariffs. I'm coming out with this outlandish number that everybody can, debate whether it's accurate or whether it's not accurate. And then the negotiations began. But the businesses that we own, did anything change that day at Tesla? Not really. And I was even more confident with Tesla because they have their factories. It was almost like Elon saw this coming a mile away, where he's got
Yeah.
vertically integrated supply chains as local as possible on these different continents. And you look and say they're not as affected as most when these tariffs take effect. So no, we weren't overly concerned. But the first time it was man-made, and it was something that could be fixed. And as far as I've been doing this for over 20 years, there's always been some kind of put, as they say, in the market. Whenever times get really, really difficult and the economy comes to a grinding halt, and there's major issues, systemic issues in the financial system, our central banks have the ability to correct that or aid that by pumping money into the system.
Yeah, great to hear your perspective. You've been there before. You didn't overreact. That's one of the reasons most people are very emotional about it. But you see what Tesla is about. You see what the economy, what's happening, and you called it right. So where are you now, like today, with Tesla stock? Maybe you can speak to this. You brought up, which is something interesting. You started to notice that Wall Street analysts are now talking about robots and robotaxi. At one point it was just Dan Ives only of Redbush Securities. Then we had Morgan Stanley put out a report, but they still don't actually include any part of their valuation of the stock. They don't count that robots. We know that ARK Invest included Robotaxi. That's why they're calling for their $2,600 price target by 2030. But now we're starting to hear more and more analysts talk about robots and robotaxi. Tell me a little bit more about what you're seeing there.
Yeah, so I think I've seen, I can't remember how many, but how many are actually discussing robotaxi when I refer to Wall Street analysts. But there's more and more Wall Street analysts that are talking about robotaxi. And we're just starting to see a few start to talk about robotics. And a year ago, we were probably having this discussion, and there was no discussion of robotics.
Zero.
2 years ago, people thought it was a joke when they brought out a human looked like a robot. So when I see a report where they start talking about robotics or Optimus, you're going to hear more and more analysts talk about this. Now, it's interesting. Remember, I made a reference to the valuation of their automobile business, and their automobile business may have this value currently, but if they do, or when they do, I believe they do, or that's why we own the company, when they solve autonomy, when they solve unsupervised full self-driving, I believe, and they're able to put these cars into the fleet. So all the promises that Tesla and Elon have made with respect to the Robotaxi and FSD, the demand for their vehicles will go up dramatically. And so Tesla's really great at pricing. When interest rates are high, people pull back on major purchases. They find ways to lower the cost of the vehicle, their margins come down. But they get that information daily of the demand in different regions of the world, and they adjust their prices accordingly. So I believe that when Tesla does solve the FSD and the autonomy and robotaxi, the demand, who wouldn't want to own one of these vehicles that will pay for itself? Maybe, I'm not sure how far out that is in different regions, because they're going to first do Austin and then some in California. But the idea of having an unsupervised FSD, I believe, I could be wrong, but I believe that the demand for their vehicles is going to go up substantially. And that's going to happen very quickly when they turn that on. People want to run out, especially elderly people. I show this too. Whenever I have dinner with clients, or if they're coming to the office, usually at the end of our meeting, I will say, hey, listen, come, let me drive you home. Let me show you how this works. If I'm out for dinner or lunch with clients, I'll usually take them for a drive around downtown Montreal, where there's just pylons everywhere and there's construction. And so far, it's handled flawlessly through the traffic. We're talking FSD 13 on hardware for, like it's top level for their FSD software and hardware. So these elderly people, usually
Mm-hmm.
the comment that they say when maybe the wife is in the back seat, husband sitting in the front, is, "You mean, I don't have to drive anymore? This is amazing,"
Mm-hmm.
right? And once it gets to unsupervised, back to the point of, I think that the demand for the autos will go up, and I think once that will push Tesla into a 50%, 60% growth rate again, and
I've been
not
seeing the same
just
thing.
and
Mm-hmm.
and that's
Yep.
a and that's it. That's important because you don't need. It's not where you see, and I wouldn't say it's a big revaluation where it's gonna push Tesla stock to $5,000 or something to that effect. But you will have momentum behind the stock when you have margins improving,
Right.
margins improving drastically quarter over quarter. You have sales going from flat sales to growing sales. And right now, Wall Street, they're not expecting growing sales in auto. So that's going to be a surprise, right? So I think that could drive some of that growth over the next few quarters if they're able to solve that unsupervised.
To what extent is the core business important to these growth businesses? Because I've been learning that, for something like a Tesla stock, it doesn't matter what you do with with the stories you tell about the growth businesses, these potential future ones, if the core business is struggling. But what you're saying is that, hey, even the core business is going to recover and grow again because of this unsupervised FSD new feature that can attach to it. That is very insightful.
Yeah,
Do,
because
do,
that's the hardware, right? So that's like an iPhone and all your apps, right? But they're the only company that can make the iPhone. But it's a Tesla vehicle right now, and it would take, I don't know, it would take a couple of years before anybody can license this, get the cameras, get the hardware or software on the cars. It'll take a couple of years. So they'll have the only game in town, at least in North America. And you think of that as that's the hardware. Well, the hardware is not as valuable right now if the software is not perfect. But once that software is perfect, um,
Nice what is that?
then the
Okay.
hard, yeah, yeah.
Yeah. So you're seeing institutional analysts, Wall Street analysts talk about robots and robotaxi. And then so it's one thing about talking about it, right? It's another thing about just, hey, we're going to start researching it, but we won't include into our stock, valuation pricing. When will that happen? Some people are telling me that I interviewed Chris Camillo, who's a very famous, legendary stock investor, because he, just famously was able to take social media arbitrage, knowing what's going on in the consumer mind, pick the right stock, and grow his portfolio. And he's been featured in many different, outlets. But he thinks that consumers will recognize the value of robots this year, somewhere between now and the end of this year. The interest and the recognition that you must invest in a robot company, and then carry that forward. The next thing is that there's only one company that you can invest in right now. It's really hard to invest in any of the Chinese companies. You can't invest, or it's harder to invest in the private robot companies. And so really the only one that you can invest in is Tesla, because it's the one that is public. He thinks that inflection point will happen this year, and it will be a great repricing. That's when the stock will skyrocket, he thinks. What's your time frame or thinking about this?
I watched that video, the interview you did. It was really good. I got a lot of insight from from his experience and what he knows, or his knowledge about robotics. So, in terms of his expectations and mine, I'm a bit more, wouldn't say bearish, but I'm not as ambitious on when Wall Street wakes up to that and you have a great repricing. He was
Mm.
saying, if I remember correctly, he was saying end of this year or possibly first quarter of next year, 2026. However, that being said, he's really dialed into that space. So either because he's influenced and he's invested in two other major robotics companies, and it's the third that he wants to add is Tesla. And I believe he said, you're paying a massive premium for all the other businesses that he doesn't care about. He wants to see them execute, and he's okay missing the first 30%
Mm-hmm.
upside if he's looking for a 10 bagger and he only gets a 6 or an 8 bagger. So he has more knowledge in that space, and he sees how quickly it's coming. And so I would have to take his word for it that he sort of he moved forward my expectations when Wall Street would wake up to that. Now, why do I think he's probably best person to talk to about this? Because he also is involved with these private deals, and he sees the demand, and he on in private equity and on Wall Street for robotics. So he understands those circles and the circles of money and who's chasing what, right? I'm spread out amongst 30 different companies that we own. Tesla happens to be one of them. It's our largest position, but I'm not as dialed into robotics, right? And he is. So he hears what people are talking about in terms of investor demand for this. Is he going to be right? I hope so. I think he's pretty optimistic by even second quarter next year. And here's why. There was something he said that concerned me. He was talking about how difficult it is to make robots, humanoid robots, and the actuators that actually don't break down, within a couple months. I can't remember what the number was, but they don't last very long. And I'm thinking, how do you get past that point? You got version one robot, version two, version three. What we see Tesla doing is the first version of 5,000, let's say they do, is going to be at their own factory, and they're going to figure out a lot of mistakes with it. The next version would be, the following year. Maybe they give it to example of like PepsiCo, another large company, and they test it in their factories as well, similar to what they did with the semi.
Mm-hmm.
Yeah. And then you're going to get to, you're talking about a third iteration, and the third iteration could be at, 100,000 units. So how long does it take them to get there? I mean, Tesla has the cash, so they can evolve quite quickly. But that was the one concern.
Mm-hmm.
Is it's one thing doing these prototypes, and how long are these going to last with all these moving parts? I never thought about that until I listened to your interview.
Yeah. I mean, so it's kind of confusing because you need to separate it out, right? There's the investment and you're waiting for the stock to pop because you think other investors are going to realize and they want to, build up the price. Then there's the actual, when is the actual product, in this case, robots, going to be useful? And when in both, right, both intelligence and useful task, but also hardware. And he's very much more realistic about that part, right? Like, yeah, it might, like you said, might take to version 3. And so don't assume that every bot that you're watching these videos, and we all know that these videos are kind of faked out a little bit or presented as best they can so that they wow you. Doesn't necessarily mean that they're ready, to actually do useful work in an actual customer's environment. And like you said, that you need everything working, right? You need that actuator to be able to last after picking up 50 pounds every day, 8 hours a day, 24 hours a day. What happens in 6 months? And if it's too fragile, then it doesn't make economic sense. When does it get to pure economic viability? That could take longer than you realize. But when will the investor community wake up and go, oh my God, this is real? Is it when they see Tesla's factory, and they already said this, by the way, right? They just announced with Morgan Stanley that Morgan Stanley was invited, that Tesla IR, investor relations, are saying, hey, we're going to invite you guys to come to the factory the end of the Q4 of this year, and we're going to show you our production line. And what if they see at that point, let's say 2,000 robots doing a variety of tasks, useful tasks, even if they're not viable, because hey, it's Tesla. They don't necessarily, it's not going to break their bank if they waste 10,000 robots. They build them and then they just scrap them, create next 10,000 with a third design. For them, it's nothing. For other companies, it would be death to their investment. They need billions more to create the second line, right? But Tesla, they can just be not faking it, but like produce it, and then not the best, but it's going to be useful. What would happen if at that point, investors see this? So yeah, do you think that could be? Yeah.
Yeah. So let's play out towards the end of the year, first quarter next year. You could our price target has been 550 on Tesla. It hasn't really changed.
It hasn't changed. Thank you. By the way, thank you. You're so rare because everyone else, like I can name 12 of them, that they just change it as the wind blows because Elon stepped up and he said something crazy. Let's lower the price.
Yeah, or the stock goes down.
I'll
But
lower the
like I said,
price.
but our
Yeah,
valuation is really on, the
right.
future cash flows 5, 10, 15 years out.
None of it
And
changed.
that
Yeah.
hasn't changed. And the only
Okay.
time it would change is if we see a big delay
Mm-hmm.
in their robotics, where they just say, you know what, scrap it. Okay, we gotta eliminate that line.
Mm-hmm.
Or if it was Robotaxi and they say, you know what, it's not working, it's giving another year. Well, we're gonna
Mm-hmm.
have to,
Yeah.
modify that. But so far they've been on track, on plan. So I think I think that their demand for their auto sales will start to spike when they start solving full self driving, and I'm going to assume it's going to happen this year. Okay, that they'll get to um, fully autonomous,
Mm-hmm.
unsupervised
Mm-hmm.
in North America.
Mm-hmm.
Okay, hopefully up here in Canada as well.
Mm-hmm.
But and so that's going to increase the demand for their vehicles, and you'll see all of a sudden this, this sucking of any kind of inventory, and then they'll have to start ramping up production. I think a combination of that plus a successful launch, and I don't mean successful launch of a robotaxi without any big errors, right? It's
Right.
fine. They roll out 10 at a time and then 20. Go slow. But as soon as they solve Austin,
Mm.
it's done. That's when the street wakes up, and that's when
Okay.
I think would
So let's
drive.
say, what number would you say? 1,000 cars, 2,000 cars in Austin?
Yeah, I'm thinking more. It's once you get to 2,000, 10,000's, you know, you're there.
There's no difference, isn't it?
No, there's
Literally.
not. It
Yeah.
really is like once you get to 1,000 and you're
Right.
doing it, then you can just turn it on, and it goes. Now, I
Yeah.
was talking to my brother about this, and we're wondering, they're going to have remote drivers in case,
Mm-hmm.
not to drive, but to oversee in case a car gets into some kind of
Mm-hmm.
issue, gets stuck or whatever. And I guess as it improves, maybe you're going to have one person for every 100 cars or every 500. They'll know the numbers, right? And as full self-driving improves, they'll be able to have more cars per individual. It'll probably be locally based, but they can also, meaning people in Austin, they'll know the streets there relatively well,
Mm-hmm.
and they can also. So that's the way I see it to solve it, and I don't think that's a huge expense. That's going to be part of the expense of their robotaxi, right? If they have 100, let's say they have one person for every 50 cars, say, or 100 cars, and every time it's always like a call center, right? And every time there's some kind of issue with a car, it goes to one of these teleoperators to get it out of a jam. And maybe you have 100 for 10,000 cars, and boom, your city's set up. When that happens, and the market recognizes that they can replicate that in every other city,
Mm-hmm.
that's when I think that you'll get this valuation. So that could happen by the end of this year, that they could solve Austin. I have no idea what the ramp is going to look like, how fast it will ramp. But that and then you get a combination of the demand for their current vehicles, would start to increase, and we'd start to see that. So all of a sudden they can move back to a 50% growth rate. Their margins start improving. We also haven't been talking about their mega packs or energy storage. That's coming in the tail end, right? And then to your point, let's say by year end you're $500 to $600 per share. If that were to work out, I mean, we're talking a lot of things have to go right. That could bring the share price, up towards 1,000, in my opinion. And then if we're there, all the stars are aligned. Robotaxis are starting to roll out in California and different areas. The demand for their vehicles is increasing dramatically. Their margins are increasing, and they've solved their battery issues as well, because I think they make it battery constrained. Then you get Morgan Stanley, other analysts for investor relations. They're invited to the factory and they see this production line. You can see them. Wall Street will they'll come out with a number that's maybe 100% above the price, maybe 50 to 100%. So if you're at $500 or $600 and then the stock's moving to 1,000, they may come out and say, we're putting a $1,500 price target on.
Mm-hmm.
Where did they come up with that number? They want to make a splash. They want to make their headline in the news. They've seen something that's really impressive, and they want to talk about it. It's going to promote their firm. But I do think that they could come out and say, you know what, this is the total addressable market. We see that they're the only company that have a mass production line that's ready to go, and they're starting to ramp this up. I remember when I think it was Morgan Stanley, Goldman, one of the big U.S. Or Wall Street firms, they came back from the production line in I think it was in Austin when it first got built. And I hadn't seen it. I went down last year. It was the first time I walked the production line for Tesla. But they came back and they were so impressed. They came out and they raised their price target dramatically. And they said, we've never seen a production line like this in the automotive business. And they were just blown away. So they had confidence in raising that price target. I can't remember how high it was relative to the existing price, but it was substantial because they walked it and they came back and they were able to talk about it. So yeah, maybe that's going to drive the price up to their price targets to 1,500 to 2,000 by next year.
Maybe, yeah. Simon, the last 2 weeks, or this week actually, Elon did 2 interviews. One that he came back for second 2 times around. He's been tweeting nonstop on X, posting nonstop on X about everything about Tesla, just one after another. People are thinking he's back. Now there's going to be a shareholder meeting, and we have been starting to communicate to retail investors, hey, get your ducks in a row here, be ready, because soon they'll drop the proxy and we'll need to vote. And we suspect that Alexandra Mertz is expecting that there will be a Class B share so that Elon can get 25% voting control, but we need to vote on his behalf to let him get Class B shares. What's your thinking about that?
If Alexandra said it was a possibility, I heard that, I don't know why it wouldn't be a possibility, because they did it with Google. They've done it, when they split the Google shares. They've done it with a number of companies where they have, multiple. And just for the audience, they're aware, you can have your shares, you can have multiple voting rights on specific shares. So instead of having to give Elon Musk's, at times, he's talking about his comp package. And I think that some of the media would try to paint the picture that he's greedy and he wants a very large pay package. Yeah. And he's clearly stated that it has nothing to do with the value, monetary value. It had more to do with control of the company. And if they're able to give let's say a Class B share, where that Class B share would have 10 times the amount of votes,
or 2 to 1,
and sure, but it could be anything, right?
He only needs 2 to 1 though, because if he's got 13% to get the 25%, 2 to 1. But yeah,
it could be what you're referring to is not exchanging his existing shares, but actually converting his existing shares to multiple voting.
Okay. Like you said, there's many. We don't know what they're going to do, but that's. Yep.
Now, do you know if they're going, if this is in the cards? Has Tesla mentioned that this is what they're going to?
All Tesla said is that they have a special committee, and that's why the proxy's delayed and the shareholder meeting has not been announced. And why would you have a special committee? That means there's something big that needs to be voted on. It's just one most obvious thing, because you move to Texas, you want to give him, that's his most important thing that he's vocalized, right? Having voting share. Maybe that's what they're going to, the reason they moved to Texas is that they are able to do the Class B shares there. So.
Okay. Interesting. I think if they, well, they'll probably pull it off. Mm-hmm. And is that going to create a pop in the stock price? I don't think so. Elon said that he's not going anywhere. Tesla's his baby. And exactly. I am curious. Can you tell me? So his new logo or his picture on X is Maximus. You
I
know,
have no idea. Kikis
you
Mac
always got the, you
Alexis.
always have the scoop over it. You're like
I
in the
don't know this
inside.
one. Yeah, these are
Oh,
all memes, and I don't know if he's just having fun or if there's some sort of Easter egg there. I wouldn't think that there's an Easter egg. He's just having fun. I don't know. Kikis
I
Maxwitz.
thought I don't know, but I the first thing I read into was I said, wow, he's in war mode. It's like,
War
and
mode, sure.
this is
Yes.
ultimate war mode of I got
Yep.
to get this stuff done. I'm
Yep.
back. I'm back at Tesla,
He is.
and
Yeah, that makes most sense actually. He just has been posting like crazy the last hours as we're doing this interview, and I mean he's saying things like that his most important focus now is helping the country get increased GDP growth. So less, yes, Doge is important, he said, but helping the country, and then of course that means robots. And he said this: robot cars, which is FSD, right? Robotics and
mhm.
autonomy, it will have a noticeable effect in 1 to 2 years, but robots will have it in 5 years. Um, so this is his conversation that he's been having these days. So, like you said, he's in war mode. He's thinking.
And that's sort of my expectations with the robots or with Optimus as well, right? Like it's going to take, yeah, 5 years to have a meaningful impact on their bottom line as well. I think it's 4 years out before it really starts having an impact.
Yep, 27, 28. So, as a portfolio manager, you choose these companies. Tesla happens to be one of the, you have a tremendous amount of conviction because you understand the company so well and you see these things coming that we're talking about, like many of the retail investors. What about your families that are your wealthy families that invest with you? You must have to, educate them, number one. And then of course, Elon is so polarizing. So you said earlier, some people leave, and that's fine. That's you're not trying to stop that. If that's the case, some of them just don't want to be there, and that's fine. But the ones who do, who are committed to this, but even they waffle. I don't know, waffles. You know what I mean? They're gonna because they hear the media. Like my wife keeps telling me all the time, "Is this true or not true?" And she was concerned, just like everyone else was at one point. Brand damage. It's so big here. Nobody's going to buy Tesla anymore. The violence against Tesla. And we just kept saying, nah, it's temporary. It'll go away. Just people have short memories. And that's what happened. So, how do you deal with that?
I think I think it's taken time to build up trust amongst our clients. Many of our
Yeah.
clients have been with us for
Mm.
close to 20 years. And I remember early on when we started making some decisions, if you think back to after the financial crisis, we started getting into companies like Microsoft and Apple, but not a lot. We didn't own enough. It was like a 2% weighting. Um, Microsoft at the time, 2010, was trading at like 8, 9 times earnings. It went from over 10 years, the stock went sideways at $20,
Mm.
and their PE multiple just got compressed over that period of time. And all of a sudden it got down to like 8 or 9, 9, 10 times earnings. It wasn't the same company as it is today. I mean,
Yeah.
it was Steve
Yeah.
Ballmer running the company, and
Hmm.
he wasn't doing a great job of innovating, but they had great cash flow, and their existing business line was a monopoly. Now, so at the time, I remember speaking to some of these elderly clients, and we said, look, we think this is a pretty good investment with a very limited downside. If it trades sideways for the next 5, 10 years and it goes down to 2 times earnings, I'd be surprised. So our clients allowed us to put some of these technology companies in our portfolio. Now, the reason that was difficult at the time is because they remember the tech crash, right? And everybody
Hmm.
got burned with tech companies.
Yes. Yeah.
Most
Yeah.
investors were heavyweight. Up here in Canada, Nortel was a big
Yes.
disaster.
Hmm.
Nortel became 30, 30 over 30% of the entire Canadian stock market at one time. Today it's gone bankrupt. So investors have gotten really burned from owning tech companies, and so anything to do with technology, our clients, because they were elderly, above 50, and a lot of them were retired, and they just wanted a safe income, good investments. They have enough. They just need some income. But they allowed us to make these decisions. They said, well, I don't know about this one. And then later on, we recognized Apple was in a league of its own, and after they launched the iPhone, and we said, we really should own some of this company. And they said, well, I don't know about this, but I'll trust you for now. And we would have to really hold their hands
Yeah.
as, let's say Microsoft would go from $20 to 30 and then back down to 20 for a period of a year or so. And we'd hold their hand and say, look, the company is doing fine. Here's where they're executing. They'd send us, same thing they do with Tesla today. They'd send us articles they read that,
Right.
Microsoft is losing its way,
Yeah.
or, Apple is extremely overvalued. But over time, all of a sudden, companies, once Microsoft went to $40, and today it's over $400. Um, Clients stopped worrying about the position, but they look back and they said, "Oh, you know what? He was actually
Yeah.
pretty right on this." So we
Exactly.
built some kind of credibility
Yeah.
from identifying these businesses. And then in terms of Apple, our biggest regret was that we didn't own enough. We didn't
I
have
know.
enough conviction in our name. We
Mm.
recognized that this was a leader. I talked to my wife about it at the time, and she says, "Oh, Samsung's probably going to go,
Yeah.
run away with it."
Yeah.
And I would doubt myself as a portfolio manager. Um, we started having more conviction, and I spent a lot of time studying growth companies, how they became these hyperscalers, where you have multiple technologies that are converging at a time that technology becomes economical. So um, if you think of Netflix, for example, right? Netflix initially was mail order CDs, right? And everybody thinks that Netflix, they're this revolutionary company. They happen to be at the right place at the right time. That if Netflix came along with a streaming service 5 years prior, it wouldn't work. The
Would have
bandwidth
failed.
wasn't there.
Yeah.
So there was a technology that was evolving and
Hmm.
bandwidth was improving. And they happened to be there at the right time where they could say, you know what, let's deliver our movies through the internet where this bandwidth is only going to keep improving. And if you could recognize that bandwidth would only get better and better, the speed in which we could download movies would improve, then you could recognize that that would be a great investment. And to the point of, Apple, for example, had they come out with a smartphone 5 years prior, it would
Hmm.
have cost $20,000, $100,000, because that's what the
Hmm.
cost of those chips would be. And we also didn't have the bandwidth with wireless internet at the time either. So it just wouldn't work, right? And they came along, and it was a computer company, and they came and disrupted a phone company with a whole new, smartphone. So they were there at the right place in the right time. So we take that, what we've learned, similar to Amazon. Okay, Amazon had this business, and they were selling books, and they said, well, why can't we sell more things? And they were able to leverage the internet, get into everybody's home, create a, we used to have, I remember we used to have these catalogs at home that you could order from Sears, right?
Hmm.
So instead of having a Sears catalog, you open your Amazon account and they'll figure a way to deliver to you. But a couple things had to happen first, right? They had to get to this massive scalability. They needed the internet to be quick. And they needed the things they had to solve was delivery. That was the biggest hurdle for them, is how do we get this there quickly? And then they got lucky with their other business of scaling Amazon Web Services. So you look at that and say, again, this was a commerce business. They needed to build out a massive amount of compute to be able to help with the overload of orders at Christmas time. Well, what do you do with that extra compute? And they recognize we can sell it. At the time, companies were needing more and more compute. So you're looking at what's the total addressable market, and they took advantage of that growing market. So how does that relate when we come back to owning Tesla, and why our clients are comfortable with owning this company? It was one, we've been able to identify these companies that are disruptors, not right away, but early enough. And our biggest mistake was we didn't own enough of them. We didn't have enough conviction.
Hmm.
So what we tried to do today was say, look, let's take what we've learned about that. What were the things that I just talked to you about that we identified of why these companies were leaders at that time? And then when we referred to Tesla, they got into the EV market. Batteries were really expensive, but you have a cost curve coming down. And they were able to identify that and say, let's ride that cost curve down. And by the time the price comes down enough, we'll be at the point where we have factories that are producing cars at the $40,000 price point, right? And that's where all the other legacy are coming in now, going, oh, okay, actually, we can create a car. Let's start designing the car now, that because the battery costs have come down. But it's too late because they already have the factory. Now they have to compete with Tesla. it's,
Hmm.
uh, it's not, which isn't fun. And so back to when we're looking at these emerging technologies and we're trying to talk to clients about this, remind them that, look, we identified this with Amazon, we identified it with Netflix, we identified this with Apple. Our only issue was we didn't have enough conviction. So let's do the work. Let us show you what the work is. And these are the things that we talk about. People come on your show and talk about, their EV business, their battery business. And then these when we look at, we always have to remember what makes a really great investment or a really great business. And my father had a speaker business when I was younger, and speaker business, hi-fi speakers. And that's a shrinking business. So he was one of the best designers in the world, but he wasn't able to make any money at it because it was a shrinking industry. And what I learned from that was that if you can identify a growing industry. Or growing total addressable market, and you can be just average, you're going to do really well.
You'll still succeed.
What if you can be the leader,
Yep.
right, in a growing industry? So Tesla and Elon have figured out these new markets way ahead of time and pivoted the company Tesla. Tesla's just been the vehicle where, no pun intended, a vehicle company identifying
for these
exactly, and then identifying autonomy, and then identifying robotics. Like, who would have thought 10 years ago that they were going to be focused on robotics? But all of a sudden Elon recognized this and said, here's a massive market. And that's,
the biggest market.
Biggest market in the world.
Yeah, I love it. What a great conversation. You really fantastic. I really appreciate you, Simon. I think the one I really enjoyed was that the core business of auto, you've identified nicely as that will recover, and not only recover, it can be a growth also. And then all of a sudden, it's the vehicle for these other, I love it. Good analysis. Appreciate you, Simon. So check out Simon at Wellington Altus Private Wealth. Check him out. It's Simon Hale 007 on X, right?
Yeah.
Thanks. See you guys. Bye all.
Good to see you again.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.